Now, yesterday's retreat or today's apparent rebound, which one will set the tone for the markets in the weeks ahead? Peter Dixon is a global equities economist at Commerzbank in London, and he joins us now to help us answer that question. Peter, before we get to that question, give us your reaction first to those German confidence numbers. Better than expected, better, in fact, than the whisper number as well.
Yeah, better than expected. I think it's all of a piece which shows that the European economy is beginning to turn around quite nicely. It's kind of what we would have expected to see at this stage. We've been in recession here in Europe for probably the last 4 quarters. Things are beginning to move, and given the fact that the banking sector in many parts of Europe wasn't quite as badly affected as it has been in the US or the UK, you'd like to think that the rebound will be reasonably decent in the second half of the year.
So does that make yesterday's sharp pullback just a pause in the recovery story?
Probably yes. We've had a couple of wobbly sessions across the world, actually, on equities, haven't we? I think that the general view is that we've had a market which has rallied very strongly, perhaps was getting a little bit ahead of itself. And I think in a market in which trading volumes have been relatively thin, we've had a little bit of profit taking. But I think there seems to be such a lot of liquidity out there and, well, sitting on the sidelines, that we will start to see some of that come back into the markets. It will, however, be a rough ride. We can expect quite a lot of volatility between now and the end of the year, but I think the general trend is likely to be upwards.
Okay, to that extent, how has this week's reports changed the tone of the debate over whether we'll see a V-shaped recovery or a W-shaped recovery?
Well, I think that we'll not get an awful lot of new evidence over the course of the next few days as to exactly what the nature of that recovery will be. I think that things like the housing numbers will be indicative of a market which is bottomed out and is beginning to recover. I think the question really remains, how strong will the recovery be, perhaps not in the next 6 months, but in the subsequent 6 months. And I think our guess is that we'll see a very strong second half of the year, both in the US and large parts of Europe. But it might be difficult to sustain that well into 2010. And if that's the case, maybe the next 3 or 4 months will be the optimal time to be in equities. And at that point, perhaps, as the recovery doesn't look quite as strong as markets would like, you might start to see a little bit of weakness starting to creep in.
What economies or markets are you most worried about?
I actually think the UK is the one where I have most concerns, because there's such an awful lot of support has been put into the banking sector to keep it afloat. It's got a huge level of household indebtedness, far greater than in the United States. And I think as a consequence, it will take an awful long time for those disequilibria to be eliminated. And I think the UK will continue to underperform, probably for quite some considerable time.
Now, on the flip side, China is often cited as reason for optimism, but the latest data out of there somewhat discouraging. Is the market putting too much emphasis on a China-led recovery? And just very quickly here.
Yeah, I think we can't really talk about a China-led recovery. China tends to follow the rest of the world, particularly the United States. An awful lot of policy loosening has been put in place to keep the domestic economy afloat, but it won't be enough to save the rest of the world.
Okay, thanks for your thoughts. We've been speaking with Peter Dixon, global equities economist at Commerzbank in London.